Hey everyone, this is Chris. Welcome back to the channel. So Walmart reported their earnings. I want to go through a couple of things, their numbers, and sort of why I think it's really important to read these things for yourself. And I want to explain sort of my thought process when I go through these things and why I think sometimes the media may be not telling you the full story, which I try to do as best I can. Well, let's get into it. So this is Walmart here, and year to date, you can see it's basically flat. It's recovering a lot of its losses, and basically what happened was, I think it was back in May, it just really took a dive. That was May 16th. This thing used to trade, what was it, trading at 159 in April, currently trading at 139 and hit a low at 119. Now, Walmart is one of your blue chippers, so I think you guys already know that, and it's also a dividend stock, so it is a stock that I like, but it doesn't mean you just buy it all day every day. You want to be aware of like what you think could be a fair value for this thing, and you try to buy things when they're cheap. First, I want to look at too is that they have a PE ratio of 29.88 as of now. This thing is in flux right now. On the day, it's up on the day about 5%. You guys can see that there, and has a dividend of 1.61%. When you take a look at this, this shows you your sort of forward forward PE ratio, and that's about 23. So their PEs are both in the 20, both in the trailing 12 months and then also looking forward. And the one thing that sort of concerns me though about Walmart is sort of how it's historically traded. And the question is always when I look at these kind of stocks that have a longer history, sort of think of like, okay, what is the growth projections and what does the market usually value the company at? Just a general rule of thumb is if a PE ratio is, let's say, for example, 25, and I have earnings growth of say 30, then I'm doing okay, right? I'm in the realm of possibility of, and in fact, I want my earnings growth to be greater than my PE. If you're getting a stock that's say traded at 23 or whatever, and you get say earnings growth of also 23, then you're getting it fair value, and Warren Buffett likes to say, I'd rather have a good company at fair value than a fair company at good value. It's a basic idea, though, is that you're willing to pay a premium for things that are a good company, and Walmart is a good company, right? I think you guys know this already. However, when you look at the historically, though, and say like in 2014, you can see here, Walmart traded at like a PE ratio of 15, and if you don't understand PE, it's basically the price of the stock in relation to relationship to how much a company earns, right? And you look at 2016, you have a PE of 13, right? 2018, the PE started to climb up on this thing, or sometimes you'll hear on TV they'll talk about multiples. But I just want you to look historically, right? 2018, it was at 26, went to some crazy high levels at like 50 something, right? I don't know what the heck was going on back then in Walmart. I don't remember. We could probably look it up, but I just want to show you the numbers do go up and down. 2020 went back to 22, right? And skyrocketed again, and now back down again to say 28. So just looking at the chart on average, I would say, generally speaking, maybe the market values Walmart in, before in the say mid-teens, and then as of recent history, maybe values it around a PE of like 20, something like that. It all depends on what they think the future outlook's going to be. Now, keep that in mind, because one of the things I think is really strange with the headlines compared to sort of what I've been reading from Walmart themselves and also in the articles, there's a little bit of discrepancy here. So if you look at just the headlines, right? If you're just a layman, look at the headlines, you say, okay, Walmart results relieve recession fears. Like, yay, no recession. Walmart's doing great. And, you read here also too that says Walmart CEO Doug McMillon says even wealthier families are penny pinching. So the idea was that if you make over 100K as a family, you're also shopping at Walmart, which sort of means like, things are going poorly for families in that regard. Maybe they're worried about recession. Maybe they're worried about money, so they're shopping at Walmart. And so it's kind of funny because when they're saying Walmart is great, the reporting that there's no recession, but generally speaking, if you're in the Walmart stock, you actually want a recession because it's supposed to be when we're all hurting for money, we all shop more at Walmart. So I find the articles kind of funny because in fact you should be cheering for a recession if you're a Walmart shareholder. Just one way to look at it, but I'm sure you can make the case that if the recession's bad, then no one's buying anything, and then forget that, right? But one of the things that really stood out to me here is you take a look at, you mean take a look for yourself. It says earnings per share for the year are expected to drop 8 to 10%, excluding divestitures, but that's better than the 10 to 12%. So they're literally saying right here that their earnings are going to go down 8 to 10%. And back in July, what Walmart did, they had set really low expectations, saying, hey, we're going to be declining 10 to 12%, right? So they set the bar low to enable them to beat their estimates. So that's one thing that happens a lot with sometimes with companies is they set the bar so low, and then when Wall Street, reports earnings, then the headlines can read, earnings beat, even though that they're expected to lose, essentially earnings. And I was looking at this further, like this is uh, from Walmart themselves, their presentation, and you can see here that basically the gist of it, all these things is they saying, hey, our top line is going up, right? Our sales are increasing, international sales are increasing, right? All these things are growing. You guys can see this, and you want to know how much the growths are. So, like for example, comp sales in the U.S. 6.5% growth in a year, and then if you do 2 years comparing to 2 years, I think that's what this is like 11.7, right? And then here you have sales. Sam's Club is up, say 9.5 percent, and then you have say international sales up, say 5.7%, right? So one of the things that you want to understand though too is that if you only look at the raw sales numbers, that includes inflation, meaning that if sweaters cost $100 today, and then maybe next week I sell sweaters for $110, it's just because the prices of everything is going up. That does not necessarily mean I'm making more money because again, price of everything's going up, right? And this is sort of where you want to take a look at, okay, so what are your sort of projections, or what are your profits coming in at? So there's two different things I want you to take a look at. So one is actually, I skipped ahead, but it's right here. It's right there. Is their projections are coming in negative, meaning decline. So for example, this is Walmart. They're projecting in say 2023 that their operating cash flow will actually go down by 3.2 billion. You guys can see right here is a negative number. They're projecting that their capital expenditures, this is money that they spend on maintaining their company, investing in buildings, investing in the company, keeping everything functioning, is going to go up by 2.5 billion. And then they estimate that their free cash flow is going to decrease by 5.7 billion. So I find it strange that we're sort of like trying to make the headlines that everything's wonderful when like they're projecting that they're going to be declining in 2023. This is from Walmart's own numbers. I'm not just making just random stuff up. That's why I find this, sometimes I feel like maybe did people not read what's going on? I don't know. Or it takes until tomorrow to read because everyone just, maybe the algorithms and the computer just trade on the headlines, and the headlines are kind of manipulated by the media, and then the computer buys everything up, and then later the humans go back and read through everything like what I'm doing. I'm like, wait a minute, they're like declining. What's going on? And I don't know. I'm just showing you guys what I'm looking at here, like third quarter. This is Walmart's own thing is saying adjusted earnings per share decline of 9 to 11%. And then for 2023, you guys can see it here, adjusted earnings per share are expected to decline 9 to 11%. And then excluding divestitures, adjusted earnings per share is expected to decline 8 to 10. But basically, maybe around 10% in declines is what we're looking at. The type of growth for 2023 is maybe around 4.5, but that's your sales growth, not your earnings. This is why you want to talk about earnings. Remember, sales will grow because of inflation. If they, let's say for example, I explain over and over again, but just hear me out. You expect inflation to grow up 10%. It's because everything costs more, and then obviously sales will go up because everything costs more, and so it doesn't mean you make more money. And you want to invest in companies that are profitable, that make money. That's essentially what stock market investing is not, you're not investing on just increasing sales. You're investing in companies that make money because if like let's say you're net flat or you're net negative, it's not a great investment. I think you guys understand that. The other thing too, which I find is interesting, I was reading through this, and this is just according to how Walmart is talking these kind of things, is so back on July 21st, July 25th, they were saying people were essentially cutting prices, or consumers were spending less money on non-essential goods, and so then Walmart was forced to cut prices, right? And then so it's kind of basically clothing, electronics, and home goods that people were not interested in buying. And we talked about this, how like customers at Best Buy, they bought a TV during the pandemic and they don't need to buy another TV again. Home goods would be something like pillows, right? Or couches. I work from home. I bought a whole bunch of couches. I mean, a whole bunch, but I bought couches, and because I wanted to refurbish my house because I'm working at home, and then I don't need to buy a couch again for another 10 years, right? So that's sort of like a temporary boost in sales for these kind of things. And so Walmart reiterated that kind of stuff. And two, when you take a look further, they were saying now Walmart's trying to paint this as positive, but I just want you to just read it and make your own determination. So Walmart's saying, okay, there's continued strong job growth and also to increasing wages, which is good news for the broader economy. And it's kind of funny because I understand why you would say these things, right? And I understand it because they even say in one article, and I've said it several times in the channel. I mean, it says it right here. 3/4 of our nation's economy is consumer spending, right here. But this is something that everyone knows this. So basically, consumers need to have money in order to spend money at stores, right? But when you talk about continued strong job growth and continued, and this is in right here, increased wages, that tells me inflation. That's what it tells me. It tells me inflation. More people have jobs, right? Everyone is working and everyone's getting paid more. That just means inflation to me. Everything's because the demand is going to be, there. If people don't have money and people say don't have jobs, then right, inflation would come down. So it's interesting because I read this as an indication that inflation is going up, and even in Walmart, that they even say in their earnings and stuff is that sales are up because of inflation, because of increased prices. But yet it's weird that it's not weird. It's just the media is not telling you that their earnings are projected to go down, and that's why I wanted to show you guys like this is where I come up with my things that I say and stuff because I read through everything. You want to read through everything, every line, not just the headline, because and I don't know. Maybe I'm crazy. Maybe I'm reading this whole thing wrong. Maybe when I read literally the very last thing in the report where their income expected to decline. Maybe I should be taking the more positive approach and say, "Oh, Chris, you're so dumb. Don't pay attention to earnings. Don't pay attention to profits. Just look at sales. Sales are growing. You're dumb, Chris." Like that's what the market feels like they're telling me. But it's like I don't know. I mean, what's going on? Your earnings per share are decreasing. Like what your projections are decreasing, and usually stocks are supposed to trade on the future. So like, why are we all excited? You guys see what I'm saying? It's bizarre to me. The other thing is one thing I thought was really funny, and this is more just a question I want to leave with you guys, which is really fun. So they were saying that Walmart has too much inventory, so they had to mark down a bunch of stuff. So it says here, the retail had to cancel orders, right? They ordered too much stuff, so they had to cancel stuff. And then they had to mark down a lot of discretionary merchandise. So this would be stuff that you don't need, so food you need, so you don't have to mark that down. But like, let's say something discretionary is like, I don't know, a barbecue, right? You don't need a barbecue. So no one's buying barbecues. You got to mark it down and get them out of your shelves. And TVs, no one needs a TV. You don't need a TV. And so you mark it down and get it out of the store. So you're marking that stuff down. So you're kind of taking a loss on that. You're canceling orders because there's less demand. But the thing that was really funny, which I wanted to bring up to you guys, was on the other hand, they're saying back to school supplies are selling well. So which I get. So kids are going back to school, which is good. But then the other one is low priced men's flannel is selling well. And what does this say about the economy? And I'm leaving this open question to you, and I'd love to hear in the comments, why is low-priced men's flannel selling well? A couple guesses. I'm just guessing, maybe because we don't have any money and we can't afford jackets, and therefore we're only buying flannel shirts because this is a preparation for the winter. Is jackets too expensive, and therefore flannel selling high? Or maybe people are getting fired from their office jobs. They don't need neckties for the coming, year. They need flannel shirts to walk outside to be, lumberjacks. I don't know. I want to get your opinion on this one of why men's flannel is selling well. Or I'm just really dumb and I have no fashion sense. I'm not wearing flannel. And in fact, maybe flannel is back in vogue. And, that's why they're selling high. But anyway, I just thought that was kind of funny. And I'd love to hear your guys' thoughts on the men's flannel thing. So, Wall Street sort of, I feel like the news is trying to get you to believe that Walmart had a great earnings. And when I read the projections that their earnings are projected to go down in the future, I'm just not seeing it. So I'm not saying I don't like Walmart. I think Walmart's a great company. I think it's one of those stores they just did a deal with Paramount, but it's weird putting these things together. And also too, when I look at Wall Street price targets, this is just as of yesterday. I'm sure they'll change them again, and this is something that you always want to take a grain of salt. But you're projecting a stock of like, say 155, maybe JP Morgan saying 128. This is just recently, like, just yesterday. And so I don't see like crazy growth. And then you have a dividend of say 1.6. So it's not like super attractive to me, Walmart. However, if you believe, I think the reason why you'd want to do this, if you believe that Walmart is wrong in their own projections, that they're not going to decline in their earnings. Remember, that's their own projections. But if you believe that maybe everyone's going to be shopping at Walmart and they're going to be making more money, then I guess it's a good thing. So that's the stock market for you. You got to sort of take everything in together and make your own determinations. And for me, I don't know why we're celebrating that their earnings are going to go down in the future. I feel like sort of the market that we're in right now is like maybe people are thinking, well, at least Walmart is still in business, and at least they didn't fire thousands of people, although they did fire some people, but at least they didn't fire thousands of people, and at least their sales are going up, although it's due to inflation. So you guys can see my humor in this stuff of where I want you to learn to read the whole thing and sort of figure out for yourself what you want to believe. So I'd appreciate your thoughts on this one. Tell me your thoughts also too on the flannel shirt situation, and what you think about declining profits or earnings in the future of Walmart. So thanks again for watching, and I'll catch you in the next video.